name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A fourth bullish white soldier yesterday and a seeming definitive move up and away from the upper trend line, currently 117.79, of the descending wedge pattern. It seems the opportunity for a false break higher is rapidly diminishing, and the potential target on the upside for the pattern is increasing. So, potential topside target X would be in the 119.30 area for this pattern. The only issue yesterday has been the cap of the June 2018 high at 118.51. Beyond that, we seem to be in fairly free territory up until target X. Just in case, below we have the powerful and significant 50% Fibonacci line of the June 2020 to January 2021 move at 117.58, and the lower trend line currently at 117.03 below that. So far today, well, prices have pushed up over the June 2018 high and towards two lesser Fibonacci levels at 118.87 and 118.97. Cable, aka sterling against the US dollar. A third bullish white soldier yesterday with a second consecutive close over the important June to date downtrend, currently 137.84. The market is now cautiously approaching the flatlining medium moving average, currently 139.21, and the more potent looking short medium moving average, currently 139.65. This counters the idea I put forward last month of a very large Adam and Eve type double top formed over the whole of this year. This all seems right now to be an echo of my words of last week on how the tri-lower last week was the first challenge to the long moving average since September 2020, and to also note at that time and now that that challenge back in September last year was unsuccessful. So far today, prices have pushed up over the medium moving average but have stalled this time at the short medium moving average. Beyond that, we have resistances at 139.99, 140.25, 140.75 that is, and 141.43. Euro sterling. An indecisive spinning top yesterday, though with a new low not seen since April this year. Overall, the market is back within the May to date based bear channel, currently 84.71 to 85.60, and is seemingly cautious about testing lower, down towards the 85.70 levels seen back in April. Overhead, we still have the strong resistance from the medium moving average, currently 85.99, and the short medium moving average, currently 85.81. Okay, so we are in the last week of July, and we're already set for a possible monthly key reversal. If we close this coming Friday either over 8600 or under 8570, then we'd be on. Anything in between and it will have a lesser outside month. As at close of business yesterday, we were looking at a monthly key reversal down. So far today, a slightly higher open and a dip towards yesterday's low. It is interesting on the one hand that we have a possible bearish engulfing pattern today, but on the other hand it also looks like a possible small bull hammer. I never said it was going to be easy. US dollar against the Indian rupee. A hanging man pattern yesterday, capped by the overhead flatlining short moving average, currently 74.54, and the rising lower trend line, currently 74.59, of the recent ascending broadening wedge pattern. Now, hanging man patterns are interesting. Traditionally, they are seen as a bearish reversal pattern. However, data suggests that they are actually bullish continuation patterns some 60% of the time. It'll be interesting to see if the market follows tradition or data. All this is in the shadow of not only the previous sessions combined, and there's a lot of it, combined immediate countering key reversal up and bullish engulfing pattern plus bullish opening white Marubozu. Yet with all that, it still doesn't seem enough. Now why do I say this? Well, a bigger shadow has been cast by the previous week's weekly key reversal down, and the move late last week below the recent ascending broadening wedge pattern. And that's currently between 74.59 and 7600, 76 even, let's say. That was formed over June to July. If ever there was an instant of a false break lower showing up, then the previous sessions to yesterday's action was it. However, it wasn't good enough then nor yesterday to push back up within the wedge pattern. Okay, I get it, there is still a chance of a false break lower, but it is greatly diminished. Therefore, I gave yesterday initial downside target X in the 74.05 area, whilst a further secondary target X1 would be in the 73.80 area. This still stands. On its way down though, the market would have to negotiate the 50% Fibonacci line of the February to April 2020 move at 74.26, as well as some late June congestion between 74.10 and 74.20. Now so far today, a lower open and a significant move lower again right now. Prices have moved down below the 50% Fibonacci line at 74.26 and are now tackling the last June congestion between 74.10 and 74.20. That being said, the 50% Fibonacci line at 74.26 is still showing resolute support. It has been breached, but it is still fighting back. US dollar against the Brazilian real. A third bearish black crow and a seeming strong move lower. The market, finally, utilized the overhead breach but still potent descending upper time, currently 517.25, the late May to early July bearish Andrews pitchfork. Now this pitchfork has been testing me by looking like it may not last a day, each day in succession, for over a week now. Yet it is still there. Prices dropped down through and closed below the descending support of the short medium moving average, currently 513.12, which had halted previous attempts lower for about 4 days. The market eventually halted at the lesser Fibonacci level at 510.87, which was the next support, closing just over it. Overall, the argument for the late June to date action becoming a possible double top instead of a bullish halfway hesitation are growing each day, but it's still early yet really for either. This all is in the shadow of the remarkable number of dead crosses we've seen here since late May. Everything now depends on whether the bearish Andrews pitchfork will continue to reassert its hold. Higher up, on the top side we have the declining medium moving average, currently 531.05, and the long moving average, currently 534.66. Both are now entering the frame. Meanwhile below we have support at 505 and 505.75, 501 even, and the big 50% Fibonacci line of the October 2019 to May 2020 move at 496.60. US dollar against the Mexican peso. A sixth bearish black crow yesterday and a break and close below the flatlining short medium moving average, currently 1996.86, and its recent partner short moving average, currently 1997.90. Overhead, the declining medium moving average, currently 20.0752, continues to pressure the market lower, along with a seemingly more potent, nearby and also declining long moving average, currently 20.1622. Overall, nothing has really taken us away from the extensive indecision we've seen previously in the market, indecision that stretches from the fall back to these levels originally seen in mid-April, but which recently started again in late June. The adherence of the market to the gently declining neckline of the February to March head and shoulder stop, currently at 1985.01, is still indicative of the neckline acting as an attractor to the market. Further below we have the April to May base congestion zone between 1985 even and 1995 even, with the neckline lower still, currently 1959.47 of the late January to mid-May head and shoulder stop acting as further support, and the support band at 1971.68 that's in between. Now so far today, a further attempt lower, testing the neckline of the February to March head and shoulders top, where we've halted for now. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.